Beyond Meat just announced that they struck a deal with the largest distributor in New York, and this is great for their new protein drink, Beyond Immersive, and the market responded very positively. It's up over 60% in the last 2 weeks. And the question is this still a great buying opportunity, or should we be more careful? Let's find out in this video. We're now looking here on the charts on TradingView for Beyond Meat. We can see it's trading at 94 cents. And we can see that it was very bullish in the last few weeks. It went up over 60%. And this is one of the reasons the very good news recently. And we can see that my average cost price is around $1.70. So I'm still down 40%. But it seems that it's broken above the 50 exponential moving average. And this could maybe continue to go higher. So at the end of the video, we'll come back to the charts and I'll give a personal verdict on what I think the highest probability is for this company in the future. So let's continue. We're now here on the investor relation page of Beyond Meat, and we can see here the latest news. This one is on April 16th, and we can click here and we can read that Beyond Meat partners with Big Geyser, one of the nation's largest non-alcoholic beverage distributors. So we can read here, expensive distribution agreement for Beyond Immersive. That's their protein drink, and it looks like this. This is what they're selling. And apparently it's doing pretty well. You can see the brand's first functional beverage line unlocks access to more than 26,000 outlets across the New York metro area. And that's possible because they work together with this company. And this company is one of the largest distributor when it comes to non-alcoholic beverages. So this is a win for Beyond Meat. And this is great to get more exposure of their product. Many months ago, Beyond Meat became a meme stock because of its extreme volatility. And if we look here now on StockTwist, we can even see that the sentiment is extremely bullish right now, which is also very interesting to see. It's no surprise that Beyond Meat is a very high shorted stock. And the question is, could there be a short squeeze? So a short squeeze is if the short sellers have to buy back their shares, and this increases even higher prices. Well, here we can see the Beyond Meat short interest ratio and short volume. And we can see that the short percentage of float is 31.75%, which is really high, even for a meme stock. And the short interest ratio is 5 days, which is a long time, which is also good. So based on these numbers, I would say there's definitely a probability that this company can squeeze to higher prices. And if we look here at the short percentage of float, we can see that after the massive squeeze, it went down and then it went up slightly, and now it's around 30%, which is enough for a short squeeze. But we need, of course, also bullish catalysts. If we look here on bar charts, we can look at the call options and we can see that at the strike price of $1, there is a lot of open interest at 22,000 and there was a lot of positive change. And this could suggest that there are a lot of people buying cheap call options, which is very interesting because this can create a gamma squeeze, which means that people are buying call options and the market makers basically have to buy these shares to cover all these positions once the prices is going to go higher, which can create even higher prices. And there's definitely also a probability of a gamma squeeze as well. We're now looking here on Guru Focus to get a quick financial overview, and they gave it a score 54 out of 100, which is basically here poor future performance potential, which shows that based on their analysis, it's a pretty risky company. And if we look here at the financial strength, we can see it's pretty low because of these debt levels. In short, this isn't the strongest financial company, but there is some positive news. We can see like in the quarter for 2025, you can see that the net income was actually positive, which is interesting to see. And the revenue was really well. And we can see that the debt levels have been decreased through, of course, their dilution, but the debt levels and cash levels are more in check. But of course, they still have too much debt. We also need to know whether Beyond Meat has a strong economic moat. So what exactly is an economic moat? Well, the term economic moat refers to a long-term competitive advantage that a company holds that protects its position in a marketplace. So during the medieval times, they built castles, and a castle with a strong moat, which is the water here, protects itself from invaders. So a strong moat protects the castle, and it's the same with a business. If the business has a wide economic moat, it's protected against the competitors. And that's what we want when we invest in a company, and it's really important for long-term investors. So this theory is popularized by Warren Buffett himself, and here we can read, investors such as Warren Buffett state that buying businesses is like buying castles. Buffett emphasizes the importance of buying businesses with deep moats, as they are protected from competitors and can therefore maintain strong profits. On this economic moat analyzer, we can find the economic moat of Beyond Meat. So let's type in BYND and we can analyze to find whether it has a narrow moat or a wide moat or no moat. Well, according to this, it doesn't have a wide economic moat, but it has a narrow moat. So it's a 4 out of 10. They do have a lot of brand power. They have established a recognizable brand in the plant-based meat sector because they're one of the few when it comes to public companies. But they don't have too much switching cost or network effects. But they do have intangible assets. So the verdict, Beyond Meat benefits from a strong brand in a growing market and proprietary formulation, but faces intense competition and lacks significant switching costs or network effects. The company's ability to achieve sustainable cost advantages will be crucial for its long-term strength. So here are these strengths like strong brand recognition and proprietary product formulation, but they do have weaknesses like the intense competition for both established food companies and new entrants, especially like these private companies, and lack of significant switching costs for consumers. When a company isn't profitable, they don't have positive earnings yet, but they do have revenue. How do we value the company? Well, we can look at a simple metric which is called the price to sales ratio. And what is the price to sales ratio? Well, essentially it's the market cap divided by its revenue. And this tells how much investors pay per dollar of sales. In short, if the company has a lot of revenue and a relative low market cap, then we could say that the company could be undervalued based on the price to sales ratio. So is the price to sales ratio high or low? Well, according to Guru Focus, Beyond's price to sales ratio is ranked better than 85% of 1,970 companies in the consumer packaged goods industry. And I think that's pretty interesting to see. So we know it's cheap, but we also know that's not the strongest fundamental company. So how long can they survive? Is there a risk of bankruptcy? Let's find out with the cash runway. What exactly is the cash runway? Well, it's a formula to find out how long a company can survive without running out of cash. And here we can read the cash runway measures the implied amount of time that an early stage startup or a company that's losing money can continue operating at a loss before depleting its cash on hand. So it's a formula, and we can read here, the cash runway is the cash on hand divided by the burn rate. So in this cash runway calculator, we can find out how long they have left before they run out of cash. So we take the total cash and short-term investments from the balance sheet of the latest quarter, and it is in millions. You can find this on financial websites like TradingView, and it's 208 million. And then we look at the net burn. So that's the negative cash flow. So the cash flow from operation is negative. That's because they're burning money. And it's 145 million in the last 12 months. So the period length is 12. And then we come to the conclusion that the cash runway is 17 months. So it's more than a year. And this is a healthy cash position, so they have enough time to turn around and to become profitable again. So I don't think that this company is going to go bankrupt in the near future, at least. It doesn't matter how sure you are when you invest into a company. It's always important to diversify well and to manage a portfolio like a pro. For example, here we can see a portfolio, and you can see that there's a 20% cash reserve and a 15% S&P 500 position, and the rest are like high growth companies. A cash reserve, you're always able to buy low and sell high. For example, if the market crashes and the stocks become less valuable, the 20% cash reserve will be a larger than 20% of the total portfolio, maybe 30%. And now you have the ability to buy companies cheap. If the companies go up in value, you have the right to sell some of the companies in order to raise the cash reserve. So you're always buying low and selling high, which is exactly what you want to do as an investor. And you can see that if you have like a S&P 500 position and many companies with wide economic moats, you will do well over time. In short, always diversify well and manage a portfolio like a pro. Beyond Meat is now trading at 95 cents. It seems that it's going to break the $1 mark. My average cost price is still around 170. So I'm still pretty negative, but I would just hold for many years. And I see this as a high risk, high reward investment. So I will not allocate more. But I think that this can definitely go up and a squeeze is definitely possible. So I'm basically risking $1 to make like $10 or even $20. With that being said, I hope you enjoyed this video. Of course, always do your own research, always do your own due diligence. It's just for educational purpose only. But if you like this content, feel free to like and subscribe and consider becoming a member. And if you want to learn even more, feel free to check the links in the description down below. And with that being said, I hope you have a great day and I'll see you in the next video. Are you ready to master stock analysis yourself? Well, I built a step-by-step video guide to help you build a winning portfolio that does well over time. So if you want to stop guessing and start winning, then make sure to check the link in the description below.